Finally, rate cuts has been executed in September, and we are being told that there will be more rate cuts within 2025 in the next 3 months as well and in the next year. So now the rate cuts has been done. What's next? Let's us get right into it. So first of all, the rate cuts will resulting in a more cheaper borrowing as well as resulting in boosting in terms of economic activity growth. More lending means more spending. So first of all, the short-term market impact will be on stock market, which will create a bullishness for the stock, especially when decreasing or rate cuts will resulting in more cheaper loans, meaning that the company actually pay less on their loans, which will eventually increase their profits, making them to have better yield, which will increase in terms of their buyers to become bullish. And second of all is going to be the bond yields. So in terms of rate cuts, the new bonds or FD has a very low interest rate. So the price of the bonds will eventually goes up because of the old bonds yield is actually stuck at a very higher rate, so the investor are willing to buy a higher yields bond or eventually will shift to other investments such as stocks, gold, or even crypto. And third, the effect will be on the currencies. So this is based on the USD. So lowering rates, right, will eventually makes the currency less attractive, or we call a cheaper money, because of less price, less spending in terms of borrowing, as well as dollars often weakens as sports become more competitive. The fourth one is going to be our commodities. So commodities will be including oil, gold, food, and so on and so forth. So this will resulting in increasing of price of the commodities as because of weakening of USD. The oil may also rise if the outlook becoming more better. The results of the rate cuts is to actually drives the market up. So with rate cuts, there will be economic growth. So the stock will continues to grow up. The USD is weakened, thus the commodity will increase. Since we are also expecting more cuts, this raise another concern. Because of what? So why is there a need for more rate cuts? So there will be a concern whereby because that the economic is too weak, too slow, which will actually leads to fear on recession. And this time, a lot of things and whatever we just mentioned will drop in price because of fear in terms of recession and so on and so forth. So resulting that the first cut is actually more on a catalysm. So the first cut is more towards a good side, but more cuts coming may raise concern whereby there could be a potential of bad market recession, slow economic activities, and is worried. That is why there is a reason whereby cuts are necessary in order to drive the market, to heat up the market again. And let's talk about what actually benefits the most is going to be companies, right? So what exactly are the companies that are being benefits from this kind of rate cuts? So first of all, it's going to be our real estate. So the meaning of becoming profits or benefits from rate cuts is that they got cheaper mortgage. So with the rate cuts, people will be more easy to qualify for loans, in increasing the activity of buying and selling for the properties, houses, and also the company will be able to reduce their costs in terms of borrowing money for land acquisitions as well as buying materials, supply chains to build housing for the people as well as driving the economic. So the second one is going to be high debt companies. So high debt companies will eventually benefit from paying less in terms on their loans because of the lower interest rates as mentioned above, as well as more activity because of weakened USD, whereby people are willing to buy USD right now because of cheap USD, which will then make them to invest into most of the US commodities such as golds and NASDAQ as well as SPX 500. There will be people who actually benefits from the rate cuts, and there will be people who does not, and perhaps is actually hurt from the rate cuts. So for example, the saver, whereby since the interest rates decrease, the deposit rates fall, so less incomes for their saving, and also for the currency holders because of the weakened USD, and also for banks. However, the banks actually has being in the situation of two-sided coins because of low rates, right? So they have smaller profits for whatever margins on lending because of receiving money and profits from the interest being paid by the lenders. However, since they also have good side, whereby if interest rates is being cut, more people will be lending, so there will be more profits from the interest of the people who are actually lending from the money. So it's actually being a two-sided blade, meaning that the banks actually receive less in terms of the interest margin. However, they do have more loans given out, whereby this could actually cover up or break even or even increase their sales in terms of lending loans and receiving more in terms of profits for the interest. So as mentioned, rate cuts can be a good catalyst to the market. However, it can still be a double-edged sword, whereby if the CPI is very high, inflation is at risk, with rate cuts, further rate cuts will make the situation even worse, whereby we will have a stagflation. So this is where all the markets is going to drop in price, which means the rate cuts activates and heat up the market, but the inflation CPI is already very high, so this can become more serious into the situation of inflation, which the Fed does not want. So that is all for this video about rate cuts and what's going to happen next. And of course, personally as an investor, we do hope to see a very great activity in terms of economic growth, and instead of going into a recession, and hoping that this rate cuts does actually improve the economic market, with also being able to maintain the CPI and inflation at a very decent and low level, and also to trigger and stimulate the employment to have more jobs creation, eventually makes the market great again, and we'll see perhaps to see and observe another bull market in the coming months, and to see whether or not if this rate cuts is a bullish rate cuts or is going to be a rate cuts that leads to, and also indicating a concern of weakening and slowing of economic. So that is all for today's video. I hope this video helps. If you like my video, you can subscribe, share the video, and like the video. And I'll see you guys on the next one. Goodbye.